Welcome to the official Trade Talk channel where I teach you how I analyze price for the most consistent and higher probable entries to help you become a better trader. Today we're going to focus on the Swiss franc versus the Japanese yen index. I'm going to line up an absolute perfect and very high probable trade setup that happened in today's live stream. If you are interested in watching me do live streams, you can scroll down to the main page on this channel and you will see my main channel down there. You can just hit the subscribe and the bell notification and it'll set you right up. So moving on, here we got the Swiss franc Japanese yen. We're going to go out to the daily time frame real quick just so that way I can show you that you are in a daily downtrend. We're going to use these levels real fast just to show you. Here is daily support, and then this day here you broke down and closed below daily support. So this day we were looking for potential entries, looking for short side setups for the trend to continue. I'll pull up the RSI briefly so you can see that you are well below the 50, which means generally the bears are in control of the market. And if you pull up your moving averages here, you can see that the 21 exponential, which is this yellow line here, is above price, which is also another near-term bearish signal. All right, so now with that being said, first and foremost, when you have a range expansion day like this, not always will you get trend continuation. You can watch it for trend continuation, but sometimes you will get a choppy inside sideways day that will probably chop you up until you get better at having patience and waiting for high probable entries. If you would have taken a trade on this day and ridden it out all the way until this day, you would have been stopped out before the high probable entry occurred. So waiting for this inside day to happen and then looking for the next day to be the actual trend continuation day can help you out a lot in looking for those high probable setups. If you look over here on this uptrend, you can see a bullish rise, then an inside bearish day, then your next day was an expansion day, same thing. Bearish crazy inside day, then expansion day. So that's what we were looking for here. We were looking for this day to potentially be one of those inside days, and then today was the day we were going to be looking for that setup. So let's go back into the hourly time frame. So on my previous video, I discussed about how looking for opens to migrate higher could give you an opportunity to potentially look for bullish entries. Well, that will only occur if your near-term trend is moving forwards, like if your last few days have been trending to the up direction. That's when you will be looking for those open migrations to give you bias or directional bias for the day. We did migrate up on our opens, but the higher time frame charts gave us our daily bearish bias. So moving on here, you can see how you just traded sideways on this day. Here is where we were looking for our potential entry as we start looking for entries around 6 o'clock in the morning. And then we get an hourly close above this hourly resistance here and as well as the open. So that pretty much squashed us looking for that entry. And then this candle here, had you taken an entry here on this candle looking for that trend continuation, you would have been stopped out in the very next hour. So moving on to this day, which was the day that we were looking for. Let's go ahead and move this level here that I have marked as your 1 hour Heath level. That is your supply zone. And you can see here it was formed 1 hour after the open. So the market opened up, set in a supply zone and traded away from it. And you can see for most of the overnight session into the London session, you were closing hourly candles below the open of the day. Now on this candle here, you did get a close above the open. However, you were below the supply zone. So a close above the supply zone would have had you scrap the trade. When it started to trade back down to the downside, you would seen that it was getting later in this hourly candle session. So the timer was counting down. You would have known that you're getting late into the formation of this candle. So you could potentially look for trade entries. Next hourly candle, you get another stab up in that area. That's going to be your entry. Stop above that swing high, and you will be targeting low of day, which is this area here. Now, I usually will take profits ahead of the low of day if there is a support zone in front of it. So on this entry here, I'll be scaling out of the position here at this area with my final target there at the low of day. And you can see all within 1 hour of hitting that entry point to target lasted 1 hour. That is pretty much when you are on the right side of the market. Your trades will work out rather quickly. And that's what I love about this strategy. We are simply scalping intraday range expansions. And if you stick with this channel, you will learn a lot and about how to analyze these intraday zones like this so that way you can take the most highest probable trade entries and setup. So if you learned something in today's video, you know what to do. Make sure you guys smash that like button, hit that subscribe button. So if you have any questions, drop them down in the comment section below, as I do try to answer every single one of them, and we'll keep putting up these fantastic trade entry videos for you guys, so that way you can get a better understanding of what you should be looking at in these financial markets. Thank you so much for clicking on the thumbnail. If you are still here, you rock. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.